Hi, my name is Dean Mead, and I am a partner and government and public sector subline leader with Carr, and Ingram, or CRI. Now that we understand a little better what deferrals are, we should take a moment to answer another common question. Where did deferrals come from? Recounting the origins of deferrals requires some context. Many people are familiar with the Governmental Accounting Standards Board's Statements of Governmental Accounting Standards, but they may not know about the GASB's Statements of Governmental Accounting Concepts, or concept statements for short. GASB statements contain the requirements of Generally Accepted Accounting Principles, GAAP, or GAAP, that governments follow when preparing their financial statements. Concept statements, on the other hand, are primarily intended to guide the GASB itself as it develops statements and other pronouncements containing accounting and financial reporting standards. Just as statements help to ensure consistency in government financials, the concept statements help to ensure consistency in the GASB standards. In the early 2000s, the GASB began working on a concept statement that would define the items that are reported in the financial statements, including assets, liabilities, revenues, and expenses. Those definitions are important in order to account for similar transactions the same way. If one transaction results in a government reporting a liability and an expense, a similar transaction generally should have the same accounting income. The result of that project was GASB Concept Statement Number 4, Elements of Financial Statements. The development of Concept Statement 4 involved the GASB examining every item that was then being reported in government financial statements and comparing them with the tentative definitions for assets, liabilities, inflows of resources, which are typically reported as revenues, and outflows of resources, which are typically reported as expenses and expenditures. Most of what was then being reported in the financial statements matched one of those four categories. However, the GASB also found items that were reported among assets, liabilities, revenues, and expenses and expenditures, but did not meet any of those definitions. Those are the items that the GASB labeled deferred outflows of resources and deferred inflows of resources. Some of the items that the GASB identified as deferrals were reported on their own lines among the assets, liabilities, revenues, and expenses. Others were aggregated into items that included both deferrals and other items. A common example of aggregated items was called deferred revenue. Deferred revenue was reported as a liability, but often was a combination of liabilities and future revenues, in other words, deferred inflows. Deferred revenue might include liabilities such as unearned income and grants received before eligibility requirements are met, amounts that a government received before it provided services or did what was necessary to be eligible for a grant. Such amounts are liabilities because if the government doesn't provide those services or meet the grant eligibility requirements, it has to give the money back to the customer or grantor government. In addition to liabilities, deferred revenue reported in the governmental funds financial statements also included unavailable revenue, which is a product of the modified accrual accounting used in the governmental funds. Unavailable revenue is not an amount owed. It is actually a portion of this year's revenue that was not received during the year or soon enough after fiscal year end to be available to pay for this year's expenditures. That single amount, formally reported as deferred revenue, also included future revenues, such as property taxes levied for the next fiscal year. That, too, is not an amount owed, it's next year's revenue. Before the advent of deferrals, that single liability amount made it appear that governments owed more than they really did, and therefore look less financially healthy. When the GASB issued Concept Statement 4, it didn't want governments to go on deferral hunts, so to speak, that might result in inconsistency in what is reported as deferrals and undermine comparability across governments. So Concept Statement 4 cautioned that governments should report only the deferrals specifically required by the GASB. At the same time, the GASB was hunting for the deferrals itself. The result of that effort was two statements with the necessary guidance for governments. Statement 63 provided the instructions for where in the financial statements deferrals should be reported. And Statement 65 identified the items previously reported as assets and liabilities that actually are deferred outflow and deferred inflows of resources. and in a few cases, actually current period revenues and expenses. Governments are required to present deferred outflows in their own section with their own subtotal following the asset section of a balance sheet. Deferred inflows of resources are required to be shown in their own section with their own subtotal following the liabilities section. Similar to assets and liabilities, deferrals should be reported by type. Governments can do so either in the financial statements themselves, or they can show a total amount in the financial statements and disclose the types in notes to financial statements. This is the top half of a typical government-wide statement of net position, and you can see the separate section for deferred outflows following the assets. In this example, the government has chosen to show the deferred outflows by type in the financial statement itself. Here's the bottom half of that government-wide statement of net position. The separate section for deferred inflows follows the liabilities. If a government chooses to show just the total amounts of deferred outflows and deferred inflows in the financial statement, as in this example, it will include a note that shows the deferrals by type. CRI provides a range of free resources to help you understand deferrals. In addition to a recording of a detailed presentation, Demystifying Deferrals, there are other short takes videos answering key questions about deferrals, as well as slide decks for all of the recordings, a companion slide deck that dives into the technical requirements of all of the deferrals required by the GASB, including debits and credits, a short plain language article that covers deferrals in a nutshell, a longer plain language article that covers the same ground as the detailed presentation, a third plain language article that explores how municipal bond analysts, taxpayer associations, legislative staff, and other users of financial statements can utilize deferrals information to evaluate a government's financial health, make decisions, and assess government accountability. And best of all, an ebook that encompasses all of those resources and can be found on CRI's website at criadv.com.